All right, folks, it is 11 o'clock, and I just want to welcome everybody. I'm going to take a couple minutes here to welcome everybody, but we want to make sure that we get started on time. But as you know, just as the things go, oftentimes you're trying to get in here and clamor to get your computer going, your audio going, and whatever. So I understand that. So my intro is going to be an ability for everybody to log in and get settled in before the actual meat and potatoes show up. So welcome everybody for the webinar from Department of Revenue today. My name is Jason Sleed. I'm the communications director here at Revenue. I'm the person who builds the Zoom meetings. I'm the one who opens up the meetings. It's my shop that does that creates the link on the website to watch it again. So if you get whisked away today and something happens and you're not able to finish watching, or somebody interrupts it or whatever, we can watch it again. I always ask people to give me about 24 hours in order to have that turnaround. The Zoom company sends me files and I have to create them and put them on the website. And so it takes me about a 24-hour turnaround to do that. But they will be available to you tomorrow. Also, make sure you check out our website under resources. The link has been floating around. It's been posted in the chat a couple times. That is where you get the PowerPoint presentation of today in case you want to follow along on your own PDF version of the PowerPoint presentation that Rachel's going to go over today. So that's how that's going. Also, if you need closed captioning, they are available to you. Just go ahead and turn them on. Also, if you want to ask any questions of our presenters today, we have a panelist and we have panelists that are going to be answering those questions, but we want you to do it through the Q&A that's at the bottom rail of your Zoom screen right now. The chat is disabled and you'll find that out as soon as you click on it, but the Q&A is how you do that. And then that way we can see those questions and get those answers right out to you. There will be some questions that might be pertinent to whatever slide we're seeing, or maybe there's a general theme of a question. We might want to raise those up to Rachel and she may answer them live. So there will be some questions that get answered just in the chat. There will be some questions that get answered live. So all those things will happen. So we're going to get that. Oh, there we go. Tatiana is putting in some of our links. So without further ado, I'd like to welcome and introduce Rachel Milne. She is our business and income tax specialist. Rachel, how are things going?
They're going great.
We're
Looking
at
forward.
381.
Wow, this I think is our biggest one.
It is.
Yeah, so this is the last webinar in our series for this year, or for the winter. So wow, that's great. I'm glad so many of you are interested in this topic and joining us today. I'll also mention that we have Brian Olson with us. Brian's our field audit unit manager, and he in a past life was also a tax specialist, so he did my job. And we also have Shaylin Daigle. Shaylin is our taxpayer accounting unit manager, and she will be helping answer questions in the chat once we get started. All right. Oh, I'm seeing she's having a little bit of difficulty getting in. Jason, you mind maybe helping her out? That would be great.
Yeah, I'm kind of watching. We're talking on the side here, but we'll get this straightened out. We'll get it
Awesome. Awesome. Okay, great. Well, we'll go ahead and get started. And yeah, so this is Montana's tax simplification for tax year 2024. So this is going to be reflected on your tax return that you file in 2025. Of course, we're beginning tax year 2024 right now. So this will be pertinent in determining your wage withholding, your estimated payments, just what's upcoming and what you should be aware of as you move through tax year 2024. All right. So we're going to talk today about Montana's current system to kind of give you a base of how our system is changing. We'll go over a summary of what the new system is going to look like, and how Montana taxable income will be calculated for tax year 2024. We'll touch on what's going to happen to estates and trusts and pass-through entities. Brian's going to talk to us about our transition provisions. There are a couple of income items that will transition over the next that will transition from this tax year to last tax year. And then we'll give you an update of what, oops,
Hey, Rachel, we don't have any audio from you. I think you muted yourself. Let's give her a second here.
Okay.
And thanks so much for people who are hopping into we are already getting our chats going from the Q&A, so we appreciate that. If anybody can't hear me, can give somebody in the Q&A. I realize we can't hear Rachel, and hopefully we're getting that ironed out, but can anybody hear me? Okay, good. Yeah, we're trying to get Rachel going on. So I'll hang tight with you guys. We're not, she's not getting away yet. We are about 4:15. As far as occupants and our little participants in our webinar today. And just to give you guys a little bit of insight, if you go to that resource page, and we've been sharing that link in the chat, that has more webinars that are recorded. So if you miss some of the other versions from previous presentations, the links are there. So
Can you hear me now?
I can hear you now.
Awesome.
Welcome back. You spilled your coffee, didn't you?
Yes.
I'm just kidding.
All right.
I was keeping everybody all warmed up, so they're ready to go.
Thank you. All right. So this is a flow chart of how we currently determine Montana taxable income. So as you know, right now we start when you calculate your Montana taxable income, you report your federal adjusted gross income first. And from there, we make our Montana additions and subtractions, which we call adjustments. And this includes your, your add back of things like your interest, other state interest, or your subtraction of federal interest, tribal income, things like that. From there, once you make those additions or your additions and subtractions, you move on and you get your Montana adjusted gross income. So on our way to Montana adjusted gross income, there are other additions and subtractions that require you to recalculate your federal adjusted gross income in order to make your Montana adjustments, which, as we all know, get a little involved in the calculations. So after we do that, we subtract out our standard or itemized deductions and our personal and dependent exemptions. Montana, this mirrors the old federal system where you would, folks still do have itemized deductions under the federal system. However, the standard deduction for federal purposes is so high now that many folks don't itemize any longer. So Montana has its own specific standard and itemized deductions. Some items are separate from the federal, and so we have those, and our standard deductions quite a bit lower than the federal standard deductions. So a lot of taxpayers end up itemizing for Montana purposes. And then we still have personal and dependent exemptions. Those are subject to our own Montana type rules. For example, everybody that files a Montana tax return ends up getting a personal exemption. So after we take out our standard or itemized deductions, as well as our personal and dependent exemptions, then we have Montana taxable income. We determine our tax rate based on the table. We have one table for all taxpayers. And then once we determine our rate, we apply tax credits, and from there, or if you're non-resident or part-year resident, you apply your Montana source income ratio to get your Montana income tax. So that's current. And so this is the last year you will, when you file your tax year or your tax return this year, this is the last year you'll kind of use this flow chart and we'll move into simplification with tax year 2024. So simplification, this was passed in 2021 in the 2021 legislative session, and there were two parts to this bill. The first part of the bill actually occurred in tax year 2022. Several credits were repealed. Many of the credits were quite obscure, with some haven't been taken in several years, such as the mineral and coal exploration incentive credit, or the dependent care assistance credit, or the empowerment zone credit. Of course, you'll see there that the adoption credit was repealed in 2022. This last session in 2023, the legislature did bring this credit back, but it's different from the old credit. And if you need more information about the adoption credit, that's out on our website, and you can learn more about that new tax credit and how it works. You'll see there's asterisks next to some of these credits. Those asterisks are uh, these credits are subject to a transition period. So these tax credits have carryover provisions, and they were repealed in 2022, but taxpayers that happen to have any additional amounts that they could have carried over because the credit wasn't used up in the first year of it being available to the taxpayer, they can carry it over until that credit period, that credit carryover period is exhausted. So the big part of the bill really goes into effect with tax year 2024. That's where we're going to see our major changes to our system. And these items, you'll see these items on the tax return that you'll file in 2025. Talking about overall what the intent of this bill was to do was really to align us more to the federal system, where we're not recalculating items of income, where we are able to use the federal filing status. We don't have our own separate filing statuses. So that's probably the biggest change that taxpayers will see, is that beginning next year or beginning this year, you're going to use your federal filing status. So you don't have to redetermine your Montana tax filing status. And really what that means, I think, to a lot of taxpayers is that married filing separately on the same form is going to go away. This, of course, right now, a lot of taxpayers use that, usually taxpayers that have dual incomes, where both spouses are working and earning an income. They use this status because it's a little more tax advantageous, because we only have one tax table for all taxpayers. So beginning in 2024, we're going to use our federal filing statuses, and there's not going to be any differentiation. And then another big item that's going to change is that our filing requirements are going to follow the federal filing requirements after any Montana adjustments that need to be made. We'll see two new tax brackets. One is for ordinary income, Montana ordinary income, and Montana ordinary income for purposes of the tax rates. That's everything that's not a long-term capital gain. And then we have a new long-term capital gain tax rate. And that long-term capital gain tax rate is just for those long-term capital gains. Only those only items that are assets that were sold or held on to for more than a year and then sold afterwards. So our current system, as you all know, it is quite quirky. We're recalculating several items to align them to the definition of Montana adjusted gross income. Under the new system, these recalculations are no longer necessary, because we're going to start with federal taxable income when we determine our Montana taxable income. So the whole concept of Montana adjusted gross income is going away. And then, because our new base for determining Montana taxable income starts with federal taxable income, our filing requirements are going to conform to the federal filing requirements, like I said, with any specific additions and subtractions that need to be made. And as you may know, the federal filing requirements, those are based off the federal standard deductions for that particular filing status. And our current filings requirements are actually based off of our Montana standard deductions, which are a half of the current federal filing or the current federal standard deductions. So as a result, many taxpayers may no longer have a filing requirement under the new system. And finally, the bill also repealed several Montana deductions, which I'll give you a look at here in a moment on the slides. So here are our new tax rates. Our new tax rates are going to be based on our filing statuses, much like the federal system. And you'll see that this tax table is for ordinary income. Like I said, Montana ordinary income is only is all of the income that's not a long-term capital gain. And you'll also see that estates and trusts are included with the single filer tax rate. You'll also see too that we only have two rates. Previously we had 7, and the highest marginal rate is currently 6.75. Under the new system, we'll only have 2 rates, and the highest marginal rate for this year, beginning this year, is 5.9%. Previously, if you paid attention under the simplification bill, they set the rate back in 2021 to be the highest rate to be 6.5%. And then this last session, they decided to lower that down to 5.9%, as well as update the earned income credit. And that will now be worth 10% as opposed to 3% of the federal earned income tax credit. Additionally, you'll see that the income in the highest bracket of the single filing status, that's actually less than what our income threshold is now. So right now, I believe it's about $21,600. So more than $21,600 is taxed right now at that 6.75% rate. But beginning with tax year 2024, we're at 20,500 is the lowest or is the highest threshold, and we're at that 5.9% rate. And this is because the bill was written back in 2021. So we've had inflation over the last couple of years, of course. And so that income threshold wasn't adjusted. And they also didn't adjust it when they lowered the rate during this legislative session. Beginning in tax year 2025, these thresholds are going to be adjusted for inflation. Here's a look at our 2024 long-term capital gains tax rates. Again, oops, sorry. These are our rates for just long-term capital gains. They're going to be taxed much like they are at the federal level. Under our current code, we currently have the non-refundable tax credit of 2% of the taxpayer's capital gain. This new tax rate is meant to replace the tax credit. And like I said before, it's just for long-term capital gains. So income realized from the sale of assets such as stocks, bonds, and real estate owned for more than a year. Unlike the credit, which was available to both short and long-term gains, this rate only applies to long-term capital gains. And qualified dividends, while they do get the capital gains rates at the federal level, they are going to be taxed as ordinary, so they do not get this preferential capital gains tax rate at Montana. And these long-term capital gains are taxed at 2 rates unless Montana ordinary income is greatest than the highest amount for the filing status. So for example, a single filer ordinary income is greater than 20,500. Their entire capital gain is going to be taxed at that 4.1% instead of, it won't be subject to the graduated rate that you can see here. And these rates are also going to get adjusted for inflation beginning in tax year 2025. here's a look at everything that's going to be repealed. So, and really you can look at this in kind of a way of, um, we're repealing a lot of these very specific provisions that are in our code, and some of them are being replaced with more simpler provisions. So up top, those first two bullet points kind of tie in together. So basically, under our previous system, our previous system is basically being condensed. So we're no longer refiguring items of income and deductions to align those with our Montana system. Instead, we're actually going to be kind of the inverse, where we're aligning the Montana system to the federal system. So one of the things that means is you're not going to have to recalculate your Social Security benefits or your net operating losses. Those are going to be included in your Montana taxable income to the extent that they are included in your federal taxable income. And in a couple slides, I have just a basic overview of what federal taxable income looks like. So you'll have a visual there of what that kind of means. Another item that was repealed, again, I previously mentioned the 2% capital gains tax credit was repealed, but it's being replaced with this new long-term capital gains tax rate. Currently, taxpayers that have retirement, they can get a partial exemption if they meet an income threshold. And then taxpayers that are 65 and older could get an exemption of $800 of interest income. Both of these provisions are repealed, but they're being replaced with a blanket subtraction of $5,500 for taxpayers 65 or older. And that number will also be subject to inflation rates. So we'll adjust it every year for inflation. They're the two biggest items that were repealed that are not going to see a replacement provision are probably unemployment and tips. Of course, right now, unemployment isn't taxable in Montana, and this will be the last year that it will not be, or 2023 was the last year that it was not, or will not be taxable. And then tips for certain service industry workers, that income exemption for those service industry workers is going away as of last year. So tips will now be considered wages for Montana purposes. There are some other items that were repealed, mainly things that were seldom taken or only taken by a few amounts of taxpayers, not a whole lot of taxpayers. And I've listed those on the slide, but in interest of time, I'm not going to cover those. So moving on to our new system, this is what it's going to look like starting this year. So we're going to report our federal taxable income, and this won't include the qualified business income deduction. Of course, that is included in federal taxable income, but that's a specific add back under the bill. And you can, along with the QBI that's included in federal taxable income, federal taxable income includes the federal adjusted gross income and the federal itemized and standard deduction. And again, that doesn't include the qualified business income deduction. So after you're going to report your federal taxable income, you're going to make your Montana adjustments. So these are the same concept as what we've got right now, where you're making your additions and subtractions, and that will put you at Montana taxable income. Then you're going to apply the ordinary rate to your ordinary income for Montana purposes, your ordinary income, and you'll apply the Montana capital gains rate to your long-term capital gains. So here's a look at federal taxable income. And this slide's really meant to be a visualization of what federal taxable income is. This is from I believe this is the 2022 Form 1040. sorry about that. I should have had that updated. And I'm getting a note that I need to slow down for questions. I'll pull up the Q&A box and see what we've got out there. So some of this we'll get, we're going to answer here in a moment, but for unemployment insurance, you will be able to include what you would do in order to get withholding on your unemployment insurance. Of course, it's optional if you want your unemployment to be withheld upon. However, you can provide the unemployment office with a form MW4 and indicate what flat amount you'd like withheld from your unemployment insurance and have that withheld. So when you go into the unemployment office and sign up for unemployment. Okay. The 2023 1040, we have a question here. Is the 2023 1040 different from the 2022 1040? No, just the standard deduction is different. So you'll see in the side column there that the standard deduction is lower than what it is for 2023. Long-term capital losses, we have a question about how long-term capital losses will be figured. And so, your long-term capital losses are included in your federal taxable income. So you won't have to do any reconfiguration of the long-term capital losses as you do right now for separate, married separate filing on the same form. Okay. And then there's a question, do you still need to file taxes if your income is under $20,000? So beginning with tax year 2024, you will follow the federal filing status. So of course, the federal filing status is based off of your standard deduction. So so that's where you'd go to determine whether or not you have to file. And of course, that's also based on a few other factors, just as far as like what types of income you have. We also, and so you'll use your federal filing requirements to determine if you have to file with Montana, as well as if you have to add or subtract any types of specific items to Montana. All right. So I'm going to turn it over to Brian, who's going to talk about our additions and subtraction, or our additions and subtractions to federal taxable income under the new bill.
Thanks, Rachel. These additions and subtractions will still apply with the new under the simplification, and these are just several items of interest. Say interest in mutual fund dividends from other states. That's if you invest in federally exempt instruments that are from state entities outside of Montana, and that the S corporation wouldn't see this on a lot of taxpayers, the average taxpayer, but this is if they paid any federal taxes at the S corporation level. We no longer have the deduction for federal taxes, and so you would not deduct those as well. There's a few other things that they kept in place. There's a special provision under Montana for this title plant. Again, that's fairly uncommon. One thing that was kept in place that's going to affect those who may have itemized on Montana in the past years is the fourth bullet, which is basically what's considered the tax benefit rule. For those who aren't in the technical side of things, and what that says is if you deducted something in a prior year and it reduced your taxes in that year, If you recover a portion of it through a refund or reimbursement of some form, that amount is added back to income to the extent that it reduced your taxes in that year. So that's going to be in play. It will wash out probably after a while, but that's always going to be something to consider. Now, if you have any Montana tax credits, and we'll talk about those a little bit in a minute, but if you had to, if you were able to deduct those federally, but claimed a Montana credit, you don't get the double benefit of both the deduction and the credit, and so you have to add those back for your Montana taxable income. Probably the main one that comes to mind is the qualified endowment credit. That's a fairly substantial tax credit. It is for donations to gifts to charities, and so you may have deducted that as a charitable contribution that you would need to add back. So they maintain, again, under the same idea of if you took a deduction for something and recovered it or didn't follow through with the requirements of it, you may need to add that back. That is part of the reason for the medical savings in the first-time homebuyers account. The qualified business income deduction, this is a federal item that essentially, simply put, Montana law does not allow. So that's why you would need to add that back. If that was included in arriving at your federal taxable income, you need to add that back. State income taxes, we specifically don't allow a deduction for state income taxes on that. So those are the additions, some of the additions to income. This seems like a fair number, but it's a lot fewer than what we had previously. So on that.
Yeah, and I'll mention too on the state income taxes, especially with our new pass-through entity tax. These pass-through entity taxes are considered state income taxes. So we had quite a bit of interest in this new pass-through entity tax, and so that's why you will have to add back any state income taxes, and that hasn't changed. State income taxes have never been deductible for Montana purposes, so those always have had to be added back.
Now, some subtractions that you may take, and these are based on federal law, and that is federal law prevents the states from taxing interest and dividends from the federal bonds. Tribal income, and we could talk about this for about an hour at least by itself, but essentially any income earned by a member who's living on their reservation and the income is from that reservation, that is exempt under a variety of laws and court cases, essentially. Federal law prevents states from taxing non-resident military service members and most of their spousal pay, the pay that the spouse might receive while they're here. This for Montana is almost exclusively for up in Maelstrom in Great Falls and that. So that, and then federal law going way back exempts railroad retirement benefits from state taxation. So those are things you'll see on the new one. That some other subtractions. A new one that they added is a subtraction of $5,500 for taxpayers 65 and older, and I believe that is per individual who's 65 or older. That replaces some of the other subtractions that we had. There was an interest exemption for taxpayers 65 and older. You could exclude certain amounts of your pension if you were 65 and older. It was kind of a catch-all to include all of these things. And that was included as part of the simplification bill. There is a new exemption for military retirement, and I won't get into too much of the calculations of that and the qualifications of that. But essentially it's an incentive for people to retire from the military to come to Montana and then continue working and adding to that. So, but that was a specific bill this last session it was enacted. So state income tax refunds, as we mentioned before, you do not get to deduct state income taxes. So logically, refunds would not be taxable. They may have been included in your federal taxable income, and so that's why we're including in that. So now again, when I mentioned earlier the idea that if you deducted something from Montana and recovered a portion of it, you may have to add it back as income. Same rule applies federally, but if it's something that you were not able to deduct from Montana, and you have to add back a portion of it as taxable, we're going to say you don't have to add that to include that in your Montana income, and you get a subtraction for that. The first-time home buyers accounts, those are no longer, you can't add to them anymore, but if people still have one, you can subtract out the interest that you may have reported federally. The Montana Medical Savings Account, that remains, and so you get the subtraction for deposits and the interest in that. The 529 plan contributions, there's two of them. There's this for students, and then there's the ABLE accounts. Those were subtractions that they specifically put into place for Montana and maintained. Those have been around for a while, and they maintained those and that. So, and on the next slide, some other subtractions. And again, these feel like a lot, but it is things to just kind of following through logically with trying to keep things in line with what you deducted and what you did in that. So there is a small deduction for purchasing recycled materials, if it's for a business related purpose. Business expenses that you were not able to deduct federally because you took a federal credit. If there's no corresponding Montana credit, you can take those as a deduction on the Montana return. And I think that would answer some of the questions we may be seeing on that. They maintained a provision that allows for sales of land to beginning farmers to be subtracted out. And they also maintained there's a separate provision. It's rarely used, but it was maintained. Incentive for investing basically in small businesses, and that the liquidating corporations, that's also a fairly small one. Gains on sale of a mobile home park to an eligible recipient or purchaser, those can be excluded. That's a provision that was a ways enacted several years ago when they maintained, felt it was worthwhile on that. So as you can see, when we talk simplification, even though we do start with Montana taxable or federal taxable, there's still some things that just you have to adjust for, but it is a lot simpler with that. So
Great. Thanks, Brian. And we have some information. We had some questions about the working military retirement exemption. We have some information out on our website about this, so I'd encourage you to go check that out. We can get the link in the chat here momentarily. Moving on, we're going to talk about non-resident part-year resident taxation. For the most part, this hasn't changed. So Montana source income is still going to be Montana source income as it is currently. So if income is earned in the state, it is taxed in the state. So, wages earned here, business income earned here. We do have a new de minimis filing requirement for non-resident wage earners, so W-2 employees. If they've worked in the state for 30 days or less, they don't have a filing requirement. They can't have any other Montana source income other than their wage income. Montana non-resident part-year resident tax is also staying the same. So you're going to use a ratio of your federal income to your Montana source income, and you're going to apply that to what your full tax liability is. that doesn't change under this bill. We have had quite a bit of questions on joint filers with spouses that have separate residencies. And basically, they're going to pay, they have to file jointly as they do, just like all other taxpayers. They're subject to the joint filing requirement if they use the joint filing requirement at the filing status at the federal level. However, they will just pretty much kind of determine their tax rate just like a non-resident or part-year resident does. So they'll do a ratio if they're everywhere to Montana source income and then apply that to their tax rate. Estates and trusts. So the bill really simplified the code section for estates and trusts. What was 40 lines of text has just been reduced down to 13. So, and the crux of simplification of this code is basically estates and trusts are going to be taxed in Montana in the same manner and to the same extent that they are federally. They'll still follow that federal filing requirement, as well as be subject to the same additions and subtractions as individuals are. They will have to refigure their income distribution deduction just like they do now under Montana under our current system. And pass-through entities, the bill didn't change too much for pass-through entities. The pass-through entity tax rate is going to follow the federal rate, or I'm sorry, the new Montana rates. So the pass-through withholding and pass-through entity tax, those remain taxed at the highest marginal rate. So they'll both be at 5.9%. Composite tax will also, the calculation of composite tax didn't change for purposes of, well, the calculation of composite tax pretty much mirrors the how non-residents taxation is used. And so, they won't, when you have a composite tax filer, pass-through entity that's filing a composite tax return, right now they get a standard deduction and a personal exemption. Under the new bill, they're going to, they won't get a standard deduction anymore, and they will get, or I'm sorry, they'll get a standard deduction, they won't get a personal exemption. And that standard deduction is going to be the single filer tax rate. And pass-through entities will not have the capital gains tax rate used against any of their capital gains income. However, anything that passes through to a partner, shareholder, and owner on the individual or trust and estate tax return will be eligible for that capital gains tax rate. So I'm going to hand it back over to Brian to talk about the transition provisions.
Thanks again, Rachel. The transition items are dealing with the time period of time that Montana did have this separate treatment of various items from the federal, and because of the married filing separately. And this actually, for those who may have been around a long time, will remember it goes back to early 2000s. And what you had was differences in certain items created by the married filing separate for Montana when you filed joint for federal. And so there may be some people that have some things that continue to carry over and would still potentially be impacting their Montana filing going forward. What the bill does is say, we're going to treat as many of these as we can in this 1 year, and then essentially move forward with kind of a clean slate on that. And so the first one, and Rachel mentioned this earlier on one of the early slides, was that if there's any tax credits that you've generated that you have the ability to carry over to future periods beyond when you generated them, those maintain. You can still continue to deduct or claim those against your Montana tax liability going forward under the same provisions and qualifications that you were able to before. So that applied before. So don't lose out on that. Now, there are some items that are specifically designated as transition items, and we'll be looking for some special reporting on those. And that when you file your 2024 tax return, if any of these apply, you need to make this election on the form that we'll provide to essentially true it up, is kind of the way things were described in that. And so couples may have, some people may have passive activity losses that they were able to apply to their federal taxes, but were not able to apply to their Montana taxes in that. You may have differences in your capital gains, or your capital losses that you have, again, that you weren't able to take on Montana. You were limited to a lower amount to claim in prior years for Montana versus federal. And so your capital losses might be higher than that, than what your federal amount is. Those will make this election and make that one-time adjustment and true it up, and going forward, we'll just still have the same losses that you do on the federal side of it. There was some consideration that if you had a different basis in an asset, the primary example that comes to mind that may affect some folks is when you filed separately for Montana previously, your deduction that you could claim for a contribution to an IRA may have been lower or limited or eliminated because of that. And so you had what would be considered a different basis in that investment account. And so you may not have to pay as much tax or report as much taxable income at that point. Most of these have probably washed out, but at this point, but just in the interest of the simplification, there's this one-time chance to kind of catch all those up, and you make this adjustment on the return on this form and that, and roll forward. One of the most common additions that we've seen with Montana is the taxable federal refund. And so if you deducted federal taxes on your Montana return, next year you get a refund, you got to add back a portion of that on your Montana return. With the elimination of the federal income taxes as a deduction on the Montana side now, we will not likely have that sort of refund being taxable going forward. But for this one last year, there's the common one that everybody's seen in that. So that's considered, they put that in the transition items in the bill. One other thing to note within the transition items, and based on some questions earlier, there is no longer going to be a separate Montana NOL calculation. And so starting with 2024, your NOL will be what you deducted on your federal return, what you computed there. There will no longer be a separate computation. So that's the transition items. There will be a specific schedule for that. And we don't anticipate many people seeing these. It's been over 15 years since there were any required differences between capital losses and passive losses. So most of those should have washed out, but there may be some people with the opportunity to do it. And this transition is limited to these items. There's not a catch-all other category under this. So that's what you can expect to help transition from the old system to the new simplified system. So. Oh, and sorry, and just to give a little bit of a with the first-time homebuyer account, that provision was repealed, but again, because it was may still have open accounts, you still do have to follow the requirement to distribute and use those funds within 10 years of when the account was opened. So that's still going to be a requirement. You may still have to do that. And the farm risk management accounts, that's the same sort of thing there. It's things that were that were in place at the time simplification removed them, but we still need sort of a carryover, if you will, of treatment of those items. So.
Thanks, Brian. All right, so you may be wondering what we're up to at the Department of Revenue to implement these changes. The first thing that we have done is updated our wage withholding tables and our withholding certificate. And we released these back in November and December ahead of the tax year. We are really encouraging employees to review their Montana tax withholdings. The system for withholding has changed. And it follows the federal system. So taxpayers will get the standard deduction, the federal standard deduction for their filing status to determine what their Montana withholding is. So deduction or, standard and itemized deduction, exemptions, allowances, those things have gone away. So we are really encouraging folks to look at that. And then especially folks that are that have multiple jobs, are married joint, and both spouses are working, as well as tipped employees that got the tip deduction and will no longer be eligible because that particular provision's been repealed. Our employer and information agent guide, that document holds all of our withholding tables. So we've released this. We released this back in November. We released this to software providers that participate in our filing of payroll, payroll providers that have Montana employees. So we hope that those software providers are updating their systems. However, we have released this out to folks through and hopefully that is being updated within your software. For another update we've made is to our publication one, and the publication one houses our worksheet ESA and our worksheet ESW. We also included a new worksheet for long-term capital gains, and as well as for figuring out what pass-through entities will have for composite tax. So our worksheet ESA and ESW, those are worksheets to determine what your estimated tax payments are. So, wage employees use the form MW4 to figure out what their tax payment's going to be or what their tax is going to be for the year. The publication ones for those folks that pay estimated payments. They can follow along on that. ESW and type in their income and come up with what their estimated payments are for the year. I did include a handout for that with the materials, and I believe Shay posted the link to that. So you can take a look at the worksheet and start calculating what your estimated payments are going to be. The Form 2 is going to see a huge overhaul, and we have begun working on that. We are hoping to, we're going through the process of internally reviewing it, having our legal staff as well as our processing staff and our business and income tax division staff review it right now. And we're hoping to have a draft product for the public to take a look at in the end of February. The form, yep.
We're stacking up. We have about seven questions in the queue. So I don't know if I know Brian's chewing on the list as well. If there might be something that is pertinent to the slide that you're on or near.
Sure. Yeah, so I can answer a couple of these here. So do we have to use the new MW form if there are MW4 if there are no changes? If that depends on what your software or your payroll provider is doing. I would say, yes, fill it out to make sure that you're going to have the most accurate amount of tax withheld from your paycheck. I would also recommend if you are, if you have multiple jobs or you are working, or if you and your spouse are working, fill it out to make sure you're having enough withheld, and also fill it out, like I said before, if you're a tipped employee. New employees will get a copy of the MW4 when they start their when they start working for a new job. And we have a couple questions. Let me see. We're working on updating a withholding yeah, so the department is planning to update a withholding tax calculator on our website. Right now, it's we have one out there. It's just it's something you can use and compare to what you're currently having withheld. And it's very basic. We pushed it out as quickly as we possibly could. So there's a way for you to enter in your wages and use that to compare to what was on your pay stub to make sure you're having enough withheld. You can get to that out on our website. It's under our transaction portal, and believe it's in the individual block, and click on more and more information. And I believe that's the link there. Don't quote me on the more information part, but you have to click in for more info, and then you can go there. And like I said, it's very basic. You just type in, what your wages are, and you can use that to compare what you're currently having withheld. We're hoping to be able to expand that here soon. But as you can see, we've got a lot of implementation items to update, as well as yeah, so we've got a lot of stuff to implement with this bill, but that's something that we are working on. But we do have the basic version out there. All right. So, and then how will this affect employees who have dependents tax-wise? So, like I said before, I would definitely fill out the MW4 because refill out the new MW4, because we're not going to have dependent exemptions anymore, or allowances. So their withholding situation may change. All right. I'm gonna move on here and just continue talking about our implementation items. So, like I said, we're updating our 2024 forms right now. Another, I went over the Form 2. That's going to see complete overhaul. We're hoping to provide that to the public in February, the end of February. The Form FID 3 will change. This is our estate and tax return, estate and trust tax return. That'll change a little bit to account for the way that taxable income is going to be determined for trusts and estates. And then there'll be some miscellaneous forms that end up going away. And then also, forms will get updated to change your reference from Montana adjusted gross income to Montana taxable income. Some forms that'll go away are the net operating loss form, because that has been repealed. So that's probably a big form that's going to go away. Along with this implementation, we've got a lot of computer, our GenTax system, which is basically our tax return database. That's going to be updated for our individual income tax payers, especially those that file separate on the same form, married filing separate on the same form. For those folks that are making estimated payments beginning in 2020, you'll want to make the payment because right now we have the separate on the same form status. Taxpayers sometimes pay on each their own individual account. But since that separate same status is going away, you'll want to make your estimated payment on the primary spouse's with the primary spouse's identifying information. So when I say primary spouse, this is the first person that will file the first person listed on the tax return. So that'll be the first person, and you'll use that number, that identifying number, to make your payment. We've got several. We're in the process of updating our administrative rules right now. The administrative rules are needed to be updated to just implement all these new items with the repeal of credits, with the change of taxable income or adjusted gross income to taxable income, as well as the repeal of filing separate on the same form. Our rules, our administrative rules needed quite an overhaul. So be on the lookout for our rule notices, our proposed rulemaking notices, and that will, we send information out when we release those in our tax news you can use. And then, we're working on communication and outreach. We are doing webinars like this. We hope to do another webinar on the updates in the summer sometime. This webinar, like Jason said previously, it's going to be recorded, available out on our website. And we also send updates on our tax news you can newsletter. So I encourage you all to sign up, and so you can get these updates on items as they become available, as information becomes available. All right, with that, I'm going to go ahead and we'll close the presentation. We have a few questions outstanding here that we'll answer. So somebody's asking about the federal income taxes paid deduction and how that add back's going to work. So the federal income tax deduction, of course, is included in your, is included in your itemized deductions. State income taxes are never deductible for Montana purposes. So if you do have a taxpayer that itemizes, they will have to add back their state income taxes, but only to the extent that it doesn't dip them below their standard deduction for that federal status. We have a question regarding non-resident taxation. The question is related to a person who owns a house in Montana, but only visits it about 3 months a year, makes no Montana-based income, and has primary residence in another state. So, this one's, if the person is truly not a Montana resident, then, and they don't earn any wages or business income, things like that, they won't have a filing requirement. Things like pension income and interest and dividends, those things are sourced to the state of domicile. Brian, do you want to add anything in on that question?
Not really. It's, yeah, that's can be tricky sometimes when you talk about somebody visiting versus moving here versus and passive versus that. But from a simple point of view, if they're just visiting and it's all interest and dividends and intangible type income, it's not likely sourced to Montana, requiring a filing.
All right. And Brian, you wanted to, sorry, let me go back to my Q&A box. I went to the wrong box. We have somebody asking for the link to the worksheet LTCG. I'll just remind folks that that's in the, that's in our In the webinar webinar page, I posted the link out there. Let's see. Will there be allowances for estimated tax penalties due to the changes? No, there, if you have reasonable cause, you may be able to get updates for your interest and dividend, or I'm sorry, your penalties and interest. However, that's based on reasonable cause. So it'd be a case-by-case basis. Just another question on how the add back to federal taxable income for federal taxes paid. So it's a little bit of a complex add back, but your state income taxes or your state income taxes, if you're itemizing, if you're taking an itemized deduction on your federal tax return, those need to be added back to the extent that it doesn't reduce the taxpayer below the standard deduction for their filing status. So if you've got a single filer who deducted their state income taxes as part of their federal itemized deduction, they're going to add back the amount that doesn't dip them below the single filing status. And Brian, did you want to speak on the reason for adding back unemployment and tips other than taxing those who can't, other than?
What I can pass along is what I know part of what was stated in the hearings about during the simplification bill, and that is that it was treating the income the same as if it was other types of wages. That's what tips are, wages. And that the trade-off, if you will, or the was that now by following the federal standard deduction amounts, you have a lot higher subtraction before you get to a taxable amount. And so that was what the trade-off was, is that even though these amounts may be included in taxable income now under Montana, you have a lot less of it that you're going to be including, or you have a lot higher income before you have to start paying taxes at all. And with potentially with some of the reduction to the rates and some of the other things that factored in there. So it was considered essentially a kind of a wash, if you will, is how it was portrayed. So.
All right. Well, I'm seeing that we finished up our Q&A, and I'm going, with that, I'm going to kind of wrap it up here. I appreciate the attendance and folks joining us today. Some key items, make sure to go out on our website, mtrevenue.gov, for more information. Sign up for our Tax News You Can Use newsletter to learn more and keep in the know on things as they're happening. We'll be releasing the Form 2 for to the public for review beginning in late February. And then we'll also, check out that publication 1 if you're an itemizer, or I'm sorry, if you file and pay through estimated tax payments. Update your withholding to make sure you're having the correct amount withheld. If you're a wage employee, use that new Form MW4. Again, really appreciate everybody's time, the great questions that we've had. And with that, I hope you all have a lovely tax filing season, and be on the lookout for new information as it comes available.
Awesome. Thank you, Rachel. And for all of those who are keeping track, I am ending the recording right now, and I'll wrap up the webinar after this. And like I said at the start of this, probably be about a 24-hour turnaround until you can see it on the website. Got to wait for Zoom to get us those files, and then we'll post it out there. So probably within 24 hours, check back with our website, and you can rewatch this, maybe catch up on something that you missed. In the meantime, please check our website often to find out the latest, greatest. Otherwise, I will see you at the next webinar. You folks have an awesome week, and we'll talk to you next time. Thank you so much.